Our guests join in this afternoon. Dipal Mehta first. Dipal, afternoon, things seem to have started off with a big bang in Jan.
Yeah, absolutely. And again, we appear to be the star performers amongst the peer group. And since the market continues to rally and we are seeing positive FI as well as domestic institutional investor flows, I think we are seeing also the first signs, therefore, of retail participation also coming in, though not reflected in the volumes, but certainly in the prices of some of the side counters and the mid-cap companies, where we are seeing volumes pick up gradually as well as price movements, which are quite spectacular. And this is clearly retail, maybe trader money taking a larger exposure. And this is typically the path which markets are expected to follow after being range bound for such a long period of time, almost 3 months or so. Now that the range has been broken and we are trading at new highs and new top has been created, I think everybody in the game is trying to increase their exposure, and whatever funds one had waiting on the sidelines, they're also finally getting into action at this point of time. But all eyes, I think, on the FII flows and global markets, and if those remain supportive, I think we are in for very good times, at least till the result season till we get into the result season, and then depending upon the quarterly numbers, I think sentiment will be driven by that.
Well, look at any of the recent listings, JSW Energy yesterday and Godrej today.
Godrej Properties, we had a look at it, but I think it was too expensive, so we avoided the time of IPO, and it's trading at a premium to its issue price, which means that it's even more expensive on listing than it was at the time of IPO. No doubt it has a differentiated business model whereby its return on capital employed will be higher than its peer group and the industry average. But then I think a lot of the projects are still in the nascent stage, as well as the fact that the largest projects or the large projects are not in the metros, where the benefit of price increases are there. Of course, there's Vikhroli, where there are some expectations that construction activity will pick up soon over there. But even if you factor everything, I think the stock is a bit expensive at these levels. Maybe at corrections, it could be a good entry point.
Yes. Dipan, in a couple of days we'll be hearing from Infosys. What are you expecting to see from technology this quarter round?
So I think it's better to keep expectations low for the time being. It's been a good quarter, but not anything spectacular. Some of the issues regarding currency movement also may have a slightly negative effect, as also one needs to keep in mind that this was a quarter where there were less working days as compared to the September quarter. So I think if one keeps slightly expectations lower and more or less in line with what the management has given its guidance, then I think it'll be fine. Broadly, I think that the year as a whole is shaping out far better than what we thought maybe about a few weeks ago, given the kind of data points that are coming out from US. We did see yesterday the Purchasing Manager Index also move up to multi-month highs over there. And I think that the jobs report also holds the key to US markets and US economy as well. So that economy and that geography is shaping up better than what we thought a few weeks ago. And maybe it won't get reflected in the Jan quarter, but for the calendar as a whole, I think that tech companies should do particularly well. Much of it could be back-ended as the US and the European economies start getting back into rhythm, and eventually that will get reflected in the stock prices. But just for this quarter, I think you may see slightly below expectation performance, and investors, traders should not build into too much into Infosys results or tech results for that matter.
Deepan, you keep an eye on the media sector. Tomorrow we've got Dainik Bhaskar listing. You expect it to be a reasonable listing?
Yeah, then it will be a good listing. It was at a discount to Jagran, and more or less the profile and the profitability and the performance of both these publishing houses are pretty much similar. So my sense is that you could get a pop on listing. The issue also by and large had done well. It had decent amount of retail participation. So I think that it will act as a good trigger for the entire sector. In any case, we are seeing that even some of the other publishing houses, Deccan Chronicle comes to my mind, has also done pretty well over the past few weeks. So I think that this listing could kind of rejuvenate the entire publishing sector. But I think investors need to kind of, divide the sector into publishers or print media and television or broadcasting companies, where I think the challenges still remain. Whereas on the publishing side, because of lower newsprint prices and better brand performance or other brand recall, they've been able to raise prices, and this quarter also will be particularly good for publishing houses. But cannot say the same for the television broadcasting companies, where I think costs are going up at rates significantly higher than increases in ad revenues, and intense competition still remains within the sector.
Dipan, do you track any of these natural resource stories? Anything you like between a Gujarat NRD or Sesa Goa or even Neyveli?
No, Mitali. I think that end of the day, these are commodity stocks, but the valuations and the P multiples at which they are trading are certainly not P multiples which one would ascribe to commodity type businesses. No doubt some of these companies are looking at expansions over here. Maybe Sesa Goa may turn out to be quite interesting, and if one has a slightly longer term view, then just on account of the change of the management which took place a couple of years ago, the company is becoming more aggressive, and the acquisition of the Dempo mines as well as the entire communication and the body language suggests that they are looking at scaling up their mining capacity, and at some stage they may get into steel making as well. So that could be an interesting story for an investor, but then I think you need to have a slightly longer term view. The other natural resource players, I think there are issues in terms of past track record, management quality, and the basic nature of the business is such that you don't see them really outperforming over the medium to long term.
Is the correction over for EduComp, you think, Dipan? Because that stock had turned weak over the last couple of months, but again in the last couple of days seems to have regathered some momentum.
See, it's difficult to call at this point of time, and I think that the December quarter numbers could be quite defining for the company. Last couple of quarters have been, we've been seeing a slowdown of growth rates, and there are certain lingering issues as regards accounting, as well as the usage of capital, and the entire business model also is undergoing a slight change, and some of the benefits of that change of business model should start getting reflected in this quarter, or at least the management would give us some insight into how that is progressing. But I think end of the day, valuations, especially the P multiple, remain the biggest hurdle for a significant up move in the stock price. And overall, the best years are basically behind the company, and we are seeing intensification of competition and scale, and the base effect also is catching up. So my sense is that you could have similar underperformance, and maybe these upswings which we are seeing over the past 2-3 days could be a good exit point. But maybe stock, at least technically, does appear to have a little bit higher to go from these levels.
Dipan, when do volumes start picking up? It's a curious situation where you can see retail participation in mid-cap and small-cap performance, but you haven't got to those kind of roaring volumes associated with these kind of markets.
Yeah, I think that's a mystery at this point of time, and don't really have a call as to when volumes will actually start picking up. But the markets, the way they are moving, eventually you should be having that scenario of a uptick in volumes, and thereafter followed by, or rather simultaneously, a spike in some of the micro cap, small cap stocks as well. That is the roadmap at this point of time. Let's just give it some more time, and maybe in a few weeks from now, around the time when the earnings season is in full swing, or just prior to the budget, we may see the markets getting into that frenzied zone, which they have not yet got into. Apart from volume, I think then even the cost of carry and the open interest in the futures market also is not shaping up, as well as at least the price movements should lead it to.
You think it might get to that situation soon though, Dipan, that you have quite a bit of froth in the futures and options market as well on stock positions?
It will, I think, and maybe I think what we are looking for is one more trigger for the retail investors to throw in the towel and get into the market and press the panic buttons. and that could be the earning season, and that kind of a trigger could even be provided by the government. I mean, we are in a season where there is maximum government communication. These are the months in which maximum reforms also take place, just before the budget, after the budget, and we are awaiting reports on a few committees. There is some talk on fiscal deficit, how that's going to get under control. Oil prices also, oil price mechanism also is under review, as also as fertilizer pricing policy. So I think that government could act as a catalyst and result in a perfect trigger for the markets to trade maybe 4 or 5% higher. It could be earnings, but something I think is just around the corner, which should take the market to the next